Hello, traders. Cousin Vinny coming to you from theclosingprint.com, Sunday, the 14th of April, 2024. In this edition of your weekend video newsletter, we'll discuss the indices which dropped below the volatility trigger, a distinctive bearish move in the process, with VIX spiking to 1920, the highest level we've seen since the September-October bottoming process last year, with 14 bearish indicators starting the week, 5 neutral, and only 1 bullish. Sum total, you need to be more cautious going into this week's OPEX on Friday. The S&P 500 moved down to the 50-day moving average, with RSI still below 50. MACD and stochastics resetting. There is a distinct possibility we could also see a bounce that follows through, even though most indicators have given us a bearish bias to start the week, as most of the indices have dropped below their 50-day moving average, like the New York Stock Exchange Composite, 2,000 stocks, a broad measure of market participation, with the S&P equal weight, removing the weight of the big cap tech names on the left, dropping below the 50-day moving average, with the number of stocks above their 50-day dropping to 45%, getting very close to oversold levels, which would be an area we'd be looking for an opportunity. While the New York FANG Index, 10 components, big cap tech, gave us an inside day on Friday, negating the breakout that we saw on Thursday. Stochastic and RSI are still in a bullish tilt, though we're only talking about 10 stocks out of several thousand at this point. And with those stocks below their 50-day, you would expect to see advanced decline percent dropping at a minus 30% on any of these or all. We'd be looking for an opportunity for a bounce and an area to start to take on additional risk, as we're currently in a de-risking mode going into Monday and Tuesday trading. At this point, it's best to heed the warnings. We've got NIMO rolling over, advanced decline percent dropping, and the number of stocks above the 50-day, all giving us the same caution signal. So watch NYSE, the summation index on the New York Stock Exchange McClellan oscillator, together with the number of new highs and new lows, testing the zero line. If we drop below this level, we could get a bit more bearish, advanced decline, and price action, sum total telling us to wait until we see institutions taking the baton again in the opposite direction. For now, we're more bearish, with 14 bearish indicators, 5 neutral, and 1 bullish to start this week of trading. S&P 500 support, 5150, resistance is 5200. If you tuned in at all last week after Wednesday, you know that we are more bearish when junk bonds drop below the 50-day moving average. At a minimum, we need to see a bounce and then a follow-through that gets price action back above the 50-day. The only reason that would happen is if these risk-off investors come back in on this short duration pullback last week. We'd also like to see the 10-year back off, though I think it's possible that we could see this continue a bit further in this bullish trend, as the ongoing debate on rate cuts produces more anxiety in the investing community. At the same time, this anxiety is showing up in the US dollar, rallying sharply on Wednesday, Thursday, and Friday, and closing at the highs of the week. MACD, momentum, stochastics are both rising rapidly as fear ramps up, punctuated by the VIX hitting 1920 on Friday and reversing, potentially turning into a strong headwind for equity traders into the month of May. Finally, we have more of a bearish headwind as well in the CRB index. Commodities are bid for the past 5-6 weeks, rising above its bullish 10 EMA. That's bearish for equities if this continues. and would potentially show up at the end of this month in this particular chart, the monthly CRB index versus the S&P equities. So we'll be very attentive to any potential change in trend to start the month of May, and we'll let you know on a daily basis going into the end of April. Completing this picture is the chart of the weekly Brent crude, which is headed back up to the 95 level above its bullish 10 EMA, a reflection of the turmoil that's going on in the Middle East between Iran and Israel over the weekend. Yet another indicator that we need to pay attention to start the week. Gold and silver both appear to be topping. As the dollar continues to move higher, that's going to put pressure on both gold and silver, with the latter showing a big reversal bar on Friday. Above average volume, indicating that the short-term trend could see some consolidation over the next couple of weeks. 8 of the 16 sectors that we follow on a regular basis are moving lower and are quite bearish. With emphasis on financials, we really need to see those bouncing. The problem is we had earnings that were sold, with JP Morgan beating the numbers, but following a distinctive move from October into the highs, institutions appear to be taking profits off the table, so that's telling us to be in a risk-off mode at the present time as well, setting up potential for those of you collecting cash over the last couple of weeks to re-enter at better prices. In addition, we had the small cap sectors with 8 of 9 small cap sectors below their 21-day moving average, the blue line. Several are below the 50-day as well, the red line, with energy the only sector in the small cap arena that is still above its 21 and 50-day moving averages. That said, small caps are still very bearish in the short term. Most of the stocks that are set up this week are borderline. You can see the IBD 50 list has only 5 candidates that show potential for a follow-through. We ran some scans, and out of all of the thousands of stocks that are out there, these few in the second line are oversold for the most part, with some of those financials like American Express at the 50-day moving average. RSI is below 50. Stochastics and MACD look like they could reverse in the short term. This is the setup that most of these charts are showing us, with many of these energy names popping at the end of the week on the Iran-Israel turmoil, like Houston American Energy, a penny stock, and just an indication of the type of speculation that we're starting to see come into the market to end the week, punctuated by some of the names we've traded in the past, like Indonesia Energy, highly speculative, but showing an appetite on speculation increasing in the energy space over the last couple of weeks. With some names from the aerospace and defense sector also pushing higher, we had BAE Systems, a aerospace and defense name, moving back above its 50-day moving average with stochastics and MACD turning, along with bullish trends that we've seen in some of the names like Raytheon as well. Last week we consolidated after a breakout that started in the second week of March, with stocks like DoorDash and Wingstop showing some strength on the IBD 50 this week. Bottom line, there's not a whole lot to do. I would say let's see how Monday and Tuesday start out. We'll send out a watch list later tonight around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast. I don't expect that there's going to be a lot to do on Monday and Tuesday unless we see some sort of reflective bounce after some, I would say, better news coming out of Iran and Israel this weekend, with Iran signaling that their military action is probably concluded at this point, though open for debate. To reiterate, we are more cautious going into Monday and Tuesday trading. So enjoy the rest of your weekend, take care, and I'll see you in the morning. Ciao.